Good Friday afternoon. It's February 5th, 2021. I'm Guy McPherson of GuyMcPherson.com, also known as Nature Bats Last. And I'm going to present a few headlines, actually many headlines, for the past week, from Monday after the markets closed until today after the markets closed, this Friday afternoon. It's been a very busy week. All right, let's get... You don't sigh before I even start. Hold on just a minute. Jeez. Somebody's anticipating just a little bit. From Monday after the close, at the Wall Street Journal, stocks end higher as online trader sends silver soaring. U.S. stocks rebounded Monday with major benchmarks recovering some ground following their worst week since October. So that was last week, was the worst. Oh, settle down. It's the worst week since October, but it appears this week is more than making up for it. From CNBC, also Monday, speculative mania is setting market up for a major correction, CFRA's Sam Stovall warns. So not everybody is pointing to good news. In fact, at Seeking Alpha, by headline, the final stages of historic market bubble. That also from Monday after the close. Tuesday at CNN Business, hedge funds are getting crushed by the worst short squeeze in a quarter century. A lot of crushing and squeezing going on there. Yeah, exactly. And you're actually on time for a change. On to Tuesday then, for the next few headlines. At Bloomberg, Yellen summons regulators to discuss financial market volatility, and that's Treasury Secretary Janet Yellen, who has summoned U.S. financial regulators to discuss recent volatility in financial markets. In her first public effort to address the tumult involving GameStop Corp shares and broker-dealer Robinhood Markets, Inc., because things are getting a little out of hand here, and the sociopaths might lose a buck along the way. Also from the story, Yellen called a meeting with the Securities and Exchange Commission, the Federal Reserve Board, the Federal Reserve Bank of New York, and the Commodity Futures Trading Commission, the Treasury said in a statement late Tuesday. The Biden administration and regulators have faced pressure in recent days to respond to the market frenzy. From February 3rd, at CNN Business, analysis. Oil companies are facing the moment of truth. The stakes couldn't be higher. Subhead, the climate crisis and the coronavirus pandemic are rapidly dividing the titans of the oil industry into two camps. There are big consequences depending on which side they choose. And the two camps are Europe and the United States. It's worthy reading that particular story. Also, from the Wall Street Journal, Biden wants a $15 minimum wage. Here's what people say it would do to the economy. Well, this is a big surprise. The people say it would be great for the economy, and the sociopaths who own this country say it would be bad for the economy because people would lose jobs, because nobody wants to pay $15 an hour. My goodness, that might be enough to, pay half your rent for a month. Can't have that. From Wednesday, again, February 3rd, Dow marks first three-session rise in about a month, but stock market gains slip in last hour of Wednesday action. So that makes 3 days in a row that the stock markets are up, but the headline has to downplay the news by claiming that the market gains have slipped in the last hour of Wednesday action. Also on Wednesday, Yellen vows to probe market mania in consumer protection test. Yeah, right. Also, Wednesday from Yahoo Finance, U.S. plans. Record debt sale, no big changes before new stimulus. And finally on Wednesday, Kroger is closing stores rather than giving workers an extra $4 in pandemic hero pay. close the stores instead of pay people what comes close to being a living wage. And these are stores primarily in Southern California. That's insane. From Thursday, at the Financial Times, food inflation concerns deepen as prices reached highest levels since 2014. Also Thursday from Reuters, China says U.S., quote, creating tensions, end quote, after warship sails near Taiwan. Things are starting to fall apart for the sociopaths in the financial markets. So are we headed for a little military action? We'll see. Also Thursday at the South China Morning Post, Hong Kong's banks are having their worst time since 2008 as profits plunge while loans soar amid city's recession. Well, it's not just the city of Hong Kong, and it's not just a recession. I'm sorry to say that it's widespread and it's a depression. However, from Thursday at CNBC, Dow jumps 250 points amid solid economic data, rising for a fourth straight day. Also, yesterday, White House may consider executive action to cancel student debt. This in the Washington Post. Also yesterday, after the close, the Dow rose 332 points. So that makes 4 solidly up days in a row because strong data mean the economy can reopen. Really? You can open everything up now because people have survived through the pandemic so far? Seems a little sketchy to me. From USA Today, are we trapped in another housing bubble? A rapid rise in home prices has some experts worried. That's definitely sigh-worthy. You got that one right. You're getting timing really down here, aren't you? And finally, from yesterday, from Thursday, in the New York Times, in the oceans, the volume is rising as never before. And the story refers literally to the volume of the ocean. Human noise in the oceans is killing organisms like never before. We're noisy, and it has consequences. From this morning, at Reuters, world shares near record levels as vaccines inject hope. You had to see that one coming. Even he knows what that means. Oh, hope again? In other news, from MarketWatch, why this signal means the S&P 500 is running out of steam, Wall Street strategist says. Is it a bubble? Is it a strong market situation? Are the stocks going up because everything's good and we can reopen the economy again? Or not? From NBC News, the U.S. economy added just 49,000 jobs in January, signaling ongoing fragility of labor market. In the subhead, quote, we're still in the dark days of winter with respect to the pandemic and the economy, end quote, one economist said. It's not just one economist who's thinking that way either. From this morning, Senate Democrats approve budget resolution teeing up coronavirus bill. That's from The Hill. And that's where we are as we turn to the numbers at the close of a very busy week in terms of Wall Street action. Stocks finished up again today, all 3 major indices up in the United States, and for the week, solidly up. The Dow leading the way, up nearly 1,000 points for the week. So it's a great day for the barons on Wall Street, a great week for the barons on Wall Street, and not such a great week for those of us on Main Street, in light of the terrible news regarding the coronavirus and the ongoing poor news with respect to the economy as jobs numbers continue to fall off, not meet expectations. So there you have it. The disconnect continues between Wall Street and Main Street. And I know what you have to say about this. You're so predictable.